Let's talk about the overview here. Obviously, we're speaking about how to file taxes with Uber or Uber Eats. The thing here you have to understand here is that as an Uber driver partner, you are basically considered an independent contractor. This is really important. You're not an Uber employee. The difference is huge because when it comes to tax time, there are some implications that I will basically explain later on in the show. So one thing I want you to remember, we are taxed as small business owners. Okay, you're not an employee of Uber Eats or Uber just in general. When you sign up with them, you agreed to terms of services that stated that you understood that you are an independent contractor and not an employee. In other words, you are self-employed. What that means is that you are providing a service as a business, not as an employee, and you are taxed as a business. Most independent contractors are known as sole proprietors. When it comes to taxes, even if you are a single member LLC. If you're a single member LLC, you are still regarded as a sole proprietorship. Actually, you have to file taxes on your 1040 on Schedule C because the IRS will look at you as a disregarded entity. This is very important to mention, okay? And basically, if you are known, let's say if you are an independent contractor, it means you are known as a sole proprietor. It's just like if you start any other kind of business, but don't actually incorporate the business. If your business is a sole proprietorship or a single member LLC, taxes for the business are done on a pass-through basis. In other words, your business profits are passed through to your individual tax return, and you pay taxes based on those individual tax rates, on your tax rate. So everything happens on Schedule C. And it means that you are on your own. No one is withholding your taxes for you. An employee has money taken out of their paycheck each week or each 2 weeks for Social Security, Medicare, and federal, state, and local income taxes. None of that happens when you actually get paid from Uber Eats or Uber. It is your responsibility, boss. It is your responsibility to know what to save and put aside for taxes. So failure to do so could be an incredibly expensive mistake. And so this is really important. So if you're working for yourself, there are some conditions you need to actually fulfill when it comes to tax time to make sure that you are in the right mindset and you have the right approach to pay the tax man now and every quarter afterwards. Let me talk to you about Uber Eats taxes and the fact that they are based on profits. This is really important. By the way, welcome back to the channel. We really appreciate having you here. We're having a conversation about how to file taxes with Uber or Uber Eats. One thing I want to say here is that Uber Eats or Uber taxes in general are based on profit. This is very different from being an employee. Here's the thing. Your income and FICA taxes are based on your income. It is basically a percentage-based system, right? So the more you make, the more you owe. The important difference is that your income from your business is not the money you got from Uber or Uber Eats or any other gig apps. That's known as gross income. Big difference here. Not net income, but gross income. Your business profit, your business income rather, is your profit or net profit. It's the amount of money that's left over after expenses. That's your net and clear cash. So to understand how your taxes work, you have to first figure out your profits. Put very simply, that means you have to know what you made, how much you earned last year. Then you have to know what your expenses were. So you need to subtract expenses from revenue, and that's your profit, your net income, your net and clear cash. Okay, so your profit is your income. So this is really good news because it means that you can write off all of your expense or all of your business expenses without going through the itemized deduction process. But please make sure that you have the appropriate backup, the appropriate evidence, the appropriate substantiations. I'm talking about receipts, records, and whatnot. Very important, okay? So we're talking about you can claim things like miles, phone expenses, delivery bags, even if you claim the standard deduction. So you need to understand your Uber 1099s. So as far as Uber or Uber Eats is concerned, you are an independent contractor who provides a service. You're not an employee. I just said that. That's why Uber or Uber Eats does not withhold taxes from your payments. It's also why the company reports your earnings on 1099 forms instead of on W-2. So some Uber driver partners receive two Uber 1099s. So you have a Form 1099K, which reports the total amount your passengers paid for the rides you provided, for example. And you have a 1099 NEC, or 1099 missed in prior years, which provides an accounting for any other income you were paid, including referrals and non-driving related bonuses. One thing I want to say here is that what Uber or Uber Eats paid you and what they say they paid you are two different numbers. And I just want to quickly remind everybody, I just want to remind people of viewers of today's topic. We're having a conversation about how to file taxes with Uber or Uber Eats. And so Uber Eats will actually, they do things a little differently when it comes to reporting your income. In fact, it's a little tricky, but you have to bear with me. You will really understand. So Uber or Uber Eats claim to have paid you more than they actually did. They say your actual pay for deliveries was more than what was deposited in your bank account, but that there were fees and commissions charged to you and taken out. Okay, so for example, you received $10,000 from Uber Eats. They report that you were paid $13,000, but then $3,000 in service fees were deducted from your pay. So Uber Eats will use two different 1099 forms. As I said before, they will actually use 1099K and 1099 NEC. It's really important to really understand the difference. You can earn thousands of dollars and not receive a single 1099 form because of how Uber Eats or Uber, for that matter, does things. What I'm trying to say here is what? You have to be really, if you are confused about the numbers that you have, it's always better to actually enlist the help of an expert. So this could be a CPA, this could be a tax attorney, this could be an enrolled agent. Okay, and don't think that they will charge you $100 or $200 for tax preparation. Sometimes it's worth it, especially if you're making a lot of cash from Uber. Let's say you are making 50 grand or 60 grand. You're one of those rare people who are actually pulling a lot of numbers from those gig apps. Then you really want to have the right expertise to make sure that you're not making any mistake, because the IRS is very adamant, is very strict when it comes to those self-employed tax payments, to make sure that you are actually complying with all the tax rules. Okay, and one thing I want to tell you here is that maybe the most important documents from Uber is your annual summary. So Uber will provide an annual summary as part of their tax information. So you can find your tax summary by clicking on account in your app, then clicking tax information. The important thing is the annual summary, and there is a part called expenses, fees, and tax. This is the section that tells you what extra amount Uber Eats or Uber says you were paid, but was deducted before you were paid. So those are really important things that you really need to pay attention to. And one thing I want to say here is that you really want to pay attention to your car expenses, because those expenses, believe me, they can reduce your taxable income by thousands. I mean, we have business clients who are able to reduce their taxable income by $10,000 to $15,000. So this is really, really great. Do not actually underestimate that. Okay. And now remember that you are taxed on profit. It's based on what's left over after expenses. So using your car for business is a significant expense item. You can reduce your taxable income by that. And the IRS actually gives you two different ways to figure out what that expense is. Okay, so there are two ways to calculate the cost of using your car. So one is the standard mileage allowance that lets you take a flat rate of 56 to 58, depending on the year, for every mile that you drove. And the other option is the actual expense method, where you claim the business use percentage of the actual cost of using your car. First, you need to add up all the costs of using your car. So I'm talking about adding everything from gas, oil changes, maintenance, repairs, and other part replacement, insurance, registration fees, depreciation if you own the car, or lease payments if leasing. So what you want to do here is that you have to see what percentage of time you actually allocate to the business part of your car, and what percentage of time you actually allocate to the private use of the car. For example, you can say, listen, I'm using my car 80% of the time, so I'm going to actually allocate 80% of expenses to the business side of things. Please make sure whatever option you choose, actually the second option, you got to have a good record keeping procedure in place, because again, God forbid, if you are audited, the IRS wants to make sure that you actually have the right paperwork to back up whatever you claim. That's why a lot of folks want to go with the standard mileage. You just want to you track your mileage during the year, and come year end, you just multiply by 56 cents or by 58 cents or 60 cents, and then voila, that's where you have it. Now, if you want to go the other route, make sure that you basically actually have the actual data, that you are able to track things properly. I mean, either option is good. It depends on what works for you. So this is really important. Now, one thing I want to say here is that when we talk about how to file your, and this is, I just want to quickly remind everybody of today's topic. We are having a convo about how to file taxes with Uber or Uber Eats. I want you to keep in mind that there are several other business expenses you can write off, okay? And you can literally write off anything that can be justified. And it's important to understand that your car expense is not the only thing you can write off. Okay, a lot of drivers make the mistake of thinking that if they claim the mileage deduction, they cannot claim any other expenses at all. No, you need to understand that the distinction here is between the standard mileage and the actual vehicle expenses. Non-vehicle expenses can still be claimed either way. Okay, so I'm speaking about anything that is not related to the vehicle itself, from utilities to office supplies to let's say to safety supplies and whatnot. It's really, so please keep that in mind. And one thing I want to say here is that when we speak about filing taxes with Uber or Uber tax, Schedule C is the most important tax form outside your 1040, really, literally. Okay, and it doesn't matter whether you are a sole proprietorship or a single member LLC, both actually flow to your Schedule C. And Schedule C is officially called Schedule C, profit and loss from business. Okay, so this is really important. And one thing I want to say here is that if you want to actually pay it, if you want to reduce your taxes, please, you want to track all your expenses all year long in an Excel spreadsheet or through an app. That way, come year end, you are able to transfer the data automatically from wherever you save the info onto your Schedule C. It's a lot faster. Okay. And one thing I also want to say here is that when we talk about Schedule C, we're not just talking about the schedule itself. We're speaking about the constellation of expenses that you can actually claim. You can write off from that Schedule C. I'm talking about a lot of things, from insurance to marketing to training, right? But also don't forget that you also have some specific deductions. For example, bottled water, snacks and amenities for customers, business taxes and licenses, city and airport fees, freeway, highway or bridge tolls, electronic toll transponder, floor mats, car tool kit, first aid kit, tire inflator and pressure gauge, portable battery jump pack. You have flashlights and flares, roadside assistance plans, office supplies. So those things all are part of your business anyway. Okay. One thing I want to say here is that as Uber and Uber Eats drivers, we have to pay self-employment taxes. Okay, so this is basically our version of the FICA tax. Because if you are working a regular 9-to-5 job, your employer will actually withhold some part of your income to actually pay the FICA tax. Now that you are on your own, you have to pay everything. You have to pay the 15.3%, not the 7.65% anymore. Okay, you have to pay everything, and it's really important. This is really a big deal because you have to pay those two sides, Medicare and Social Security, for yourself and for the employer. So employees don't have to file anything for FICA. Independent contractors pay twice as much as employees. Okay, so it's important. So we're talking about an employee, for example, pays 6.2% for Social Security and 1.45% for Medicare. Self-employed individuals pay 12.4% and 2.9% respectively for a 15.3% total. Okay, so this is really important. Now, a lot of people are thinking that, well, this could be bad or good, whatever. Well, it's all about what really works for you. Not everybody can go to a regular job, 9 to 5 job, and sit down in a cubicle and just work all day long. Some people love the independence, the autonomy. So with each process, with each option comes a constellation of pros and cons. Okay, so please make sure that you actually remember that independent contractors, in other words, I'm talking to you, Uber or Uber Eats partners, you have to pay twice as much as employees. And so you have to pay Social Security and Medicare on every dollar earned. So this can happen every quarter. So that's what we call estimated quarterly payments, tax payments, to make sure that you actually catch up. Okay. And you basically also have to file something called Schedule SE. That's the self-employment form, where you basically tell the IRS how much you owe in terms of self-employment. And and one thing I want to say here is that, please, we have covered this on another show extensively. So if you're interested, please let us know, and let us know in the comment section below, and we'll certainly direct you to the right video so you can read the whole thing. We have covered this within 30 minutes or within 20 minutes and explain everything in and out, which you really have to do. One thing I want to say here is that profits that are added to other income determine your income for your tax form. And the thing you have to understand here is that when we talk about Schedule C, obviously Schedule C is income and expenses, profits and expenses from a business, right? But Schedule C is not the only thing, because the thing is, what if this year you drove for Uber or Uber Eats, but you also had other gigs? In other words, you were a 1099 contractor with other gig apps, or you actually had a part-time job at a company. So you could actually be a 1099 and W-2 employees. So it's really important to actually add all the sources of income that you had during the year to make sure that your taxable income is accurate. Okay, and this becomes a little tricky here, especially if you forget or you don't keep track of your income sources. What will happen here is that the payers, those institutions with whom you work during the year, they are obligated to send you your 1099, your W-2, and whatnot at the end of the year. Not at the end of the year, but let's say around February 15th. Okay, so please always make sure that you actually account for all your sources of income. And one thing I want to say here is that income tax bill plus self-employment tax minus payments and credits equal what you pay in or refund. What I'm trying to say here is what you want to start with your total income. Okay, when we talk about filing taxes with Uber or Uber Eats, you always want to start with your total income, and you want to subtract some allowances and tax deductions to get your taxable income. And you want to figure out your income tax based on taxable income, filing status, and your tax brackets. I mean, if you are filing jointly with your wife or husband, you're not going to have the same numbers as if you're filing single, or if you're filing as a head of household. Things are different. It depends also on your state. So it depends on your geography and filing status. So you want to add your self-employment tax to your income tax for your total tax. And you want to add up your tax credits, withholding, and estimated tax payments and compare them to the total tax. So if payments and credits are more than the total tax, you get a refund. If not, you pay in. This is actually a simple answer to a complicated calculation that we have actually covered on other shows. So, but if for any reason you need help and you actually want clarity on some of these topics, please, you can actually write questions below, and we'll certainly answer you. Not a problem. So I really want to quickly recap here because I have actually bombarded you with a lot of information. And the big question is, what does all this mean for you, for us, all of us who are Uber or Uber Eats partners? The thing is, there are a few things that you want to take away from this show. First, you want to focus on the tax impact of your Uber Eats or Uber earnings. Okay, so really, you want to ask yourself, what kind of tax brackets does this income level puts me in? Am I making 40 grand, 50 grand, 60 grand, 70 grand? Okay, what kind of tax brackets do I have to be in based on the income I'm generating? I'm not asking you to always be scared, but you want to know. See, information is power. So the more you know, the more you think about things in advance. This is called tax planning. The more you do that, the better it is for you. So this is really important. Now, another thing I want to say here is that you want to track everything. See, the whole thing is, I was just saying this before, you want to track everything. And this is why, especially the most important elements, things like your mileage, things that actually relate to your car or the vehicle you're using, if you're biking, if you are using some kind of other motorbike or whatever. So make sure that you track everything. And nowadays, luckily, there is a wide variety of tools, including apps, free apps for that matter, that allow you to actually track everything because you are running a business. Okay, so one of the most important things a business can do is keep track of its expenses and income. And you want to constantly save for taxes. One thing we tell our clients is that you want to save at least 50%. If 50% is too high for you, save 40% of your income for taxes. It's a lot better to overpay than to underpay because there are penalties when you underpay. Okay, and the thing is that why 40%? Well, because you have to think about your income tax. You have to account for, as I just said, the FICA tax, the self-employment tax. Okay, and so there are a lot of things. So 40% is pretty decent because if we go by, if we say 15.3% is the federal FICA tax, you also have to think about your state income taxes. Okay, and then you have your 20% or 25% in terms of federal income tax. So very easily, 40 to 50% can actually go in taxes. So please save for taxes and get a tax pro if you are unclear about the direction you want to take for your taxes. Always, it's better to have a tax pro help you out, pay $100 or $200 and have peace of mind than trying to get into something you have no idea about. Thank you so much for your attention. I really appreciate it. Into this conversation, I was just talking to you about how to file taxes with Uber or Uber Eats. I really hope that this actually shedded a lot of lights on those things for you. And I'll speak to you another time. But until then, remember, stay marvelous.